a really big year for QUB, the year that just finished. Most of you are aware we completed the 50% acquisition of the Patrick Container Terminal business. We acquired the balance of the 50% of the Australian Amalgamated Terminals, which is the automotive break bulk terminals in Port Kembla here in New South Wales and Brisbane. We also acquired Aurizon's interest in the Moorebank land, the property, and the Moorebank project. Paul was very, very busy effectively refinancing all of our finance in QUB, but also putting $1 billion of non-recourse debt into Patrick. So it was a big year, and I think what we've done is put QUB in a really strong position from a balance sheet perspective. 30th of June, liquidity in the order of $890 million to continue to grow QUB, to invest in Moorebank. As we've talked to the market around, we have a commitment with the Commonwealth over the next 5 years to spend in the order of $400 million to develop the first rail terminal within 2 years, the import-export rail terminal, the new interstate rail terminal within 4 years, and enabling infrastructure around the Moorebank project. And as Nathan said, yes, very pleased to announce that we had reached agreement with Target, the first tenant for Moorebank, for a warehouse in just short of 40,000 square metres. The really pleasing thing about, there's a couple of really pleasing things. A, first tenant. B, a tenant that's going to invest significant capital inside the warehouse. We will fund the warehouse. It will be on a 10-year lease with options beyond that. And they will be spending significant capital on the latest sortation systems and scanning systems and all of the areas where we think, and we're in a confidentiality agreement with them, but what we think is a classic example of an existing retailer that is thinking about how they're going to change their supply chains with the Amazon operations coming to Australia. So really encouraged by that. The other really good part about it is that Target is not a customer of QUB Logistics today. We've signed a 5-year logistics contracts with 5-year option beyond that, and then options to basically align their logistics contract with the lease tenure at Moorebank. In our game, you don't usually get a 5-year logistics contract from those sorts of players. It's usually a 2-year or a 3-year. So really, it validates to us what we've been proposing around this Moorebank project for quite some time, and our views that it's going to be an opportunity for tenants there to significantly improve their supply chains and take costs out of their supply chains. In terms of the results, Nathan touched on a really good year from our underlying businesses, particularly the ports and bulk business that, as most of you know, the mining boom dropped off, oil and gas dropped off, and at the end of 2015 we completed 3 big projects that were contracts that finished. So 16 results dropped. 17 has been a really good year. I think 18% improvement in that division on an underlying basis. So very pleased with that. I think what I'd say is that our customers, the management team out right around Australia, a large volume of that business comes out of Western Australia in particular. The customers appear to be much more positive around the future. There's requests for tenders on various aspects and different things. CML announced the reopening of their manganese mine, which benefits Utah Point for us in the future. But generally positiveness across all sorts of commodities that we're handling, from mineral sands, copper concentrates, salt exports, iron ore, a little bit of coal, not a huge proportion of coal. The logistics business, we were pleased with that. That still operates in a very fragmented, competitive market with other road carriers. We did indicate the results would have been a couple of million better off if it hadn't have been for an illegal industrial dispute with the MUA at Patrick's late in the year. For those that weren't familiar, illegal industrial action, Fair Work order, return to work. They refused to return to work, went to federal court, refused to return to work, and so we lost a couple of weeks of operations of the rail activities at Port Botany for Patrick's, and that flowed on to QUB in terms of the import customer base. The logistics business was really a beneficiary of some strong agri exports as well. our bulk grain rail contracts with our partners at Quattro down in Port Kembla was very strong. You are all aware of grain exports in containers, chickpeas, all of the agri products was very strong. So it was a good year there. The other part of the business is Patrick's. We're not unhappy with where Patrick's is at. We know we paid a full price for the Patrick interest. We knew there was excess capacity with competitors in the market, and there'd be some price tensions around that, which there has been. We're extremely pleased with the first 12 months of ownership of Patrick in terms of the whole demerger from Asiano, establishing management, entered a new 4-year EA with the workforce. We've recontracted about 85% of the customer base. The two big customers being Maersk, number 1 in the world, and MSC, number 2 in the world, which is more than 50% of Patrick's business. And so we're still working on the implementation of the automation here at Port Botany, which still has some productivity target and improvements to go yet, but we're working through that. And we always knew that from our experience previously, that when you implement these new automation systems, you don't get optimum productivity for a few years until you actually fine-tune all the software, the development and equipment, etc. So